It's doing a bunch of stuff. So when you buy insurance, you're talking to a chatbot. You just download the app or go to the website. If you've spent more than 90 seconds buying insurance, you're doing something wrong. So it's just a friendly chat that you go through, answer a couple of questions, and you're done. So all of the underwriting, all of the binding of the insurance is done like that.
So no human, does a human being internally ever review what the bot has decided?
Well, where the humans come in is where claims get paid.
Okay.
There we have bots that pay claims as well. A third of our claims are paid algorithmically within 3 seconds of submission. So literally, you're making a claim, you chat to our chat box, it's called AI Jim. You tell AI Jim, hey, I got my laptop stolen, this, that, the other.
Right.
And in a third of the cases, the money is in your account within 3 seconds.
You don't have to show any proof?
Well, yeah, so depending on the nature of the claim, it will ask you this stuff.
So I don't want to suggest that some of your customers game your AI here. But what kind of claim would the AI bot accept in 30 seconds?
Well, in homeowners and renters insurance, there's a lot of what's known as high-frequency, low-severity claims. Your laptop was stolen, your bike, your camera, that kind of stuff. The AI will pay those things all day long and within 3 seconds. If the house was burnt to the ground or you're being sued by your neighbor or stuff like that, that's obviously more protracted. But in terms of keeping people honest, it's not just about AI. Our company is also built on social sciences, behavioral economics.
Okay.
And one of the issues with insurance and one of the reasons that people game insurance is because they feel it's an uneven playing field. If I make a claim of my insurance company for $1,000, if they refuse that, they're $1,000 richer, I'm $1,000 poorer. We're fighting over the same coin. Lemonade doesn't work that way. So we've built an alternative business model, which is why we built Lemonade as a new kind of insurance company where we take a flat fee. And if there's money left over at the end of the year, it goes to a charity of your choosing rather than being pocketed by us, and that neutralizes some of the conflict of interest. So a lot of thinking going into how to create...
But it's still binary whether you're going to pay out the full amount or not, right? If I lose my laptop or if there's a fire in my apartment I can't live in and now I got to go live in a hotel, and you have to decide what hotel I'm going to live, there's a binary choice.
There absolutely is. However, our thought processes are also binary. We either think of a process as being confrontational and a win-lose proposition, or we think about it as something different in nature. Now, if you're making a claim of Lemonade and we remind you, hey, please remember that unclaimed money is going to the local soup kitchen that you designated as your give back cause, you might moderate your behavior and embellish your claims less.
So people actually do behave better?
That's right, and if we have no interest in denying your claim, because we're not going to pocket that money anyway, we may behave differently. So this is also about trying to create a system that works better and brings out the best in humanity, whereas insurance today, frankly, oftentimes brings out the worst in humanity.
Are you looking at just these markets? Could you see yourself expanding? For example, cars, vehicles.
So yes, our goals are expansive. You mentioned SoftBank invested in us, Sequoia, Google, others have invested as well. And our goal is really to create a new kind of insurance company, which will be a global brand and cover many different areas of insurance. The insurance companies that dominate today, 10% of the Fortune 500, are companies that are insurance companies that have been around for 100 years. Are those same brands going to dominate for the next 100 years? We think not. We think there's a changing of the guard coming.
How are you acquiring customers and how much is it costing you?
We acquire customers digitally. Everything is done digitally. There was just a report came out a couple of days ago that social is providing about 17 times more traffic to us than it does to our competitors. As soon as you neutralize conflict of interest, as soon as you make it affordable, and people talk about this a great deal.
Because people are on Twitter and on Instagram. Right. Are you advertising on these places?
We do both. So we get a great deal of organic growth, people talking about it.
Right.
Nobody likes tweeting about insurance unless it's about saving money, doing good, social impact.
And what's the age and market price, meaning how high in the stack do you go?
Sure. So today's a good day to mention that 51% of our customers are women. Actually, our conversion rate for women is better than men, which is remarkable in the insurance context. It's usually very much male skewed. 75% of our customers are under 35. And for early customers, young customers, they can save 70% relative to some of the incumbents. So pretty dramatic savings.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.